Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and all the market strategies you need to follow for the day. Well, we've already seen a 7-day of a winning streak for the markets, which has resulted in the Nifty index gaining over 400 points in trade. It's also poised for a second straight weekly advance as well, and also needs a close above 24,741 to really register another positive close for the week as well. And that's what we are going to be keeping a clear eye out on today. Now, as far as the setup or the global trading setup is concerned, we've seen overnight all the three major US indices close at yet another record high level, with the Dow Jones up by 1.36%, the Nasdaq ending with 0.7% gains, and the S&P 500 also 0.8% higher in trade as well. Now, remember, the CPI inflation in the US has come in hotter than the expectations. We've also seen that the jobless claims are higher than the last week as well. All of it is pointing out to the Federal Reserve a meeting that will take place now next week to indicate some sort of a rate cut, or probably go ahead with the 25 basis points of a rate cut, at least for this one as well. And that is what the US markets are pinning their hopes on. What's happening in the Asia markets? Well, they've traded higher, tracking strength on the Wall Street, mainland China. Index was just flat with a positive bias. We've also seen, Hong Kong Hang Seng Index gain about 1.6% in trade. Japan's Nikkei has risen by about 0.5%. We've also seen South Korea's Kospi advance by about 1% as well. Now, as far as the GIFT Nifty futures are indicating, they're also indicating to a positive start in the trade today at about 25,179. So there could be a 74 point of a bump up that we could expect today. What's as far as the foreign flows are concerned? Well, the FIIs have offloaded equities worth about 3,472 odd crore rupees as on September 11. So yet again on the selling side, and a larger number there. Domestic institutional investors, however, made up more than the losses that we incurred on the foreign side. So the domestic institutional investors bought stocks worth about 4,045 odd crore rupees in yesterday's trading session. Of course, a lot of stocks that you need to watch out for today, and the market will be focused on yet again the IT space at this point in time again. And of course, leading that will be Infosys, that after the market hours has announced an 18,000 crore rupee buyback. Remember, this is the largest ever buyback that Infosys has ever announced, and this is the fifth buyback that we do know. It's much larger than the expectations that the street was carrying, anywhere between 11,000 to 13,000 odd crore rupees. But this time around, the buyback size is 18,000 crore rupees at a 19.3% premium. It's largest in the last 10 years that we've seen, and IT stocks have actually remained under pressure from the weak macro trends and the tariff risks. At this is hopeful of giving some support to the prices, at least in the interim as well. Let's actually welcome our guest on board. We are now joined by Mr. Abhishek Basu Malik, who's joining in to share with us his views on the markets, and of course share with us an outlook on what to expect going forward from here. He's from Sri Rama PMS. Warm welcome to you, Abhishek ji, and good to have you with us on the program. I'll start off by taking your view on the current setup in the markets. On the one hand, we do see a lot of momentum back home on the domestic front. We have reforms that are going. We have hopes that the festive season will be buoyed by GST rationalization. We had stronger GDP number as well. And we are now seeing Indian IT companies, come up with buyback, show a lot of strength in their own companies to support some prices which have been lagging thus far. But on the other hand, the global uncertainty and the risk continue to persist, although there are some signs that the talks could resume again. At this point in time, the markets have remained positive, but in a very narrow band of a trade. How will you look at trading in this current setup, sir?
So first of all, good morning to you and all your viewers. Uh, the numbers, GDP numbers, inflation numbers, all the macro numbers have been good for India for a while, right? Even when the market was correcting significantly, the macro numbers were good. So, did the market correct because the macro numbers were bad? Of course not, right? Uh, the problem was the uncertainty coming out of US because of tariffs and so on and so forth, and that has not yet completely resolved itself, but it is showing signs of progress, right? But having seen what the US establishment, the US president is capable of, I mean, he can change his point of view in a whim, right? So I don't think that until and unless the tariffs are significantly reduced, there is going to be much headway from this tariff related uncertainty. Regards the Infosys buyback, I think there's nothing to talk about. It's a very small buyback in quantum. The number or the price may be slightly on the higher side than what the street was expecting, but I think give up end of the day it is like 2.5-3% buyback. So in a way, it's probably a sort of a bigger dividend payout, if I may look at it that way. Not everybody is going to be able to participate in the buyback at the price that the company is talking about. So there's not too much to read into this other than a sort of a sentimental impact.
Okay, so only a sentimental impact, 2.4% of the entire equity right there. There could be a bump up because from the current market price, there is a premium, at which, the IPO is coming in. But at the same time, it's only a sentimental uptick that we can expect. What do you think of the impact on the other IT stocks on the back of this buyback? Do you think TCS will have some pressure of coming up with a buyback yet again, now with Infosys coming in with the same too?
So most of these IT services companies have sort of a herd mentality. So I'll not be surprised if others follow suit. But having said that, my sense is that we are probably coming to a point where slightly longer term investors should start looking into the IT pack once more, both the services side as well as the product side, because what has happened is that there is too much of negative sentiment right now that AI is going to take over everything and the entire business model is going to be at stake for most of these IT services company. I've been speaking to a number of senior folks in different companies, in the management teams, and the sense that I got, has been that the bigger change in uh, AI is going to be in the application layer. It has to be integrated with the existing services, existing products, and for that you will definitely need uh, you will definitely need somebody to be doing that, right? And uh, we've seen Indian IT or overall the IT services being written off many times before. This time will also be like that, and maybe a quarter, 2 quarters down the line, most of these companies which are now beaten down probably is going to see better days.
Fair point. Any sense when you have on the entire sector and the approach to the IT sector right now, now that the hopes are that the tariff talks can resume soon. This has been one of the key impacts that has had over the last 4 months odd on the IT sector. Now we do hear that, Trump's India envoy, big Sergio Gore, has stressed on defense and trade talks, and he's talked about how next week he could be inviting, Indian envoy yet again to be talking on the trade tariffs. So once again, the hopes are that there could be some resolution to the 50% tariffs. Do you think that is going to be auguring well for the IT pack at all after the 4 months of consolidation and negative moves?
So the IT tariffs has nothing to do. I mean, IT has nothing to do with tariffs because right now the tariffs is on the product side, right, on the
Yes.
manufactured goods side.
Yes.
IT's services. Now, the two challenges that IT services faces. One is the challenge with regards to AI and the adoption of AI, more significantly, which is probably going to put pressure on the margins, right? Because there is going to be this uh, necessity to use more and more AI uh, in programming, in application maintenance, testing, so on and so forth. So, reduction in margins is one area of concern for AI. I mean, for the IT services companies. And the second uh, big challenge is if these companies are, uh, taxed in some way, if there is some kind of a IT services tax, or if there is significant outsourcing kind of tariffs that are put, which is very unlikely. I mean, it's a very, very low probability event in my opinion. But if that is the other, uncertainty that is there, uh, other than blanket, very large tariffs being put on IT outsourcing, I don't see a major challenge. There will be restrictions on H1B and B1 and L1 kind of visas. I think the Indian companies have been navigating that visa regime challenges for a while, and I don't see that as a challenge.
Okay, let's quickly look at the market pre-open tick. So it's at 25,065. We are above by 60 odd points, so indicating a positive start again in trade today. And let's look at Infosys. At least in the pre-open, there is a sharp move on Infosys yet again on the back of the largest ever buyback that it has announced. There was a 4.5% tick, first tick on the pre-open trade. Right now, it's up by 2.7%. 1551 is what we are looking at. So we'll look at how Infosys and the other IT pack definitely open. This is one of the key areas that we are for sure going to be looking at very closely once the markets open. Abhishek ji, when we talk about, okay, these are the export oriented sectors, or those that can get impacted directly or indirectly by any change in the external environment, policy changes, the way the newer world order is. But a lot of people and a lot of analysts are now focusing their attention back home on the domestic themes. You've also talked about it on our channel quite a bit, that domestic themes are better to be looked at in this current environment. And now that we have a GST push coming in, do you think there is more upside than what was being earlier thought of? And or do you think a large part of the new news is already done and dusted? And maybe only once the impact is seen on the bottom line, on the sales figures, we'll then see markets reacting further up. How are you approaching the domestic themes as of now, sir?
See, first of all, domestic theme is not one, it's not one thing. There are so many things which are happening, right? So let's take, for example, travel. Now, travel is something that I think we have seen post-COVID pick up significantly, and it has not dropped, right? People were expecting maybe that after a year, after 2 years, it will sort of taper off, but that has not happened. And in fact, it is gone from strength to strength, right? Uh, that is one. If you look at, say, the wealth management, the financialization of savings as a theme, again, that is not something that has tapered off. We continue to see, record inflows into mutual funds. We continue to see very, very robust results from wealth management companies. Let us look at, say, cement. Fantastic numbers have come in this quarters from most of the cement companies. Same for agrochemicals. So there are a lot of pockets. If you look at two-wheeler numbers, again, they have started picking up. If you look at rural consumption, again, started picking up. Uh, See, the income tax that was reduced, free, no income tax up to roughly around 12 lakhs or something. So that is going to show its impact starting now onwards, right? So people started getting the benefit in their paychecks from April. So this is the first festive season we are seeing where people would have seen some amount of additional savings because of tax reductions. We have seen interest rate cuts. We've seen GST cuts now coming in, which will show up, say, another week, another 10 days from now. Today is the 12th, so 22nd,
Yeah, yeah.
right? So these things will start showing its impact over the next, say, month, 2 months, 3 months. And I think the October to December quarter, some of these consumption numbers should get much better than what was the baseline that we thought it would.
Absolutely. Let's talk autos also, for instance, sir. Auto sector has been reflecting the maximum amount of enthusiasm with these GST cuts that are being announced. Many companies have also started to pass on the GST rates even before September 22nd is what we are given to understand. Just to look at that demand uptake and the inquiries that have risen as well. We've spoken to the industry representatives at FADA who are saying that they are very well prepared to cater to all the demand that will actually come in. and they have a lot of stock, to cater to the demand that will come in starting September 22nd from Navratri as well. Auto sector again has been facing a lot of headwinds in the last 1 year, 1.5 years, or one after the other. There have been many challenges. How much of this GST rationalization will be able to cushion that kind of an impact that the sector was facing, and how much can it also drive further the momentum that we were all waiting for?
See, first of all, let's understand that auto as a sector is a cyclical sector. So it is in the nature of the beast that it will have cycles. Uh, Having said that, I think, see, people don't go out and buy a car or a motorbike or a scooter just because it is, 3% or 5% less costly, right? It's for most families, wherever they are placed socioeconomically, it is a big decision, right? Whether somebody's buying a scooter or whether somebody's buying a car or an SUV or whatever, right? It's not a trivial decision that one fine morning you get up and you say, "Acha, theek hai, prices are 3% down. Let's go and buy." Right? It doesn't happen that way. So the point is that there is going. So what will the GST cut do? It will probably bring to the table those people who were in a dilemma. Should I buy it now or should I buy? Wait for some more time. Maybe those people are going to get sort of encouraged and enticed to buy at this point in time. But in aggregate, after 3 months, after 6 months, do you see that this price rationalization is going to create a huge demand surge? It's very, very unlikely.
It's very, very unlikely. What about the auto ancillary space, sir? How are you looking at that as well? Because we do know that every one car will have at least 4 tires to be sold and many more spare parts to be sold. With this kind of a demand that we are going to be seeing for the OEMs at large, how are you looking at the ancillaries?
So interesting part is that actually the ancillary industry is much better, in terms of cyclicality, in terms of its resilience, compared to the auto industry. Primarily because most of the larger or the mid-sized players are also fairly large exporters, right? So they supply to the global market as well. So to an extent, there is less cyclicality in auto ancillaries compared to autos. So some of these well diversified large auto ancillaries could actually be better placed than playing this upsurge through the two-wheelers or the four-wheeler makers.
Okay, got that. Let me also just quickly look at how the markets have settled in the pre-open. 25,074 is what we are at on the Nifty right now. We have all the sectors that are hovering higher in the pre-open, at least giving us a sense that there could be a positive start and a broad-based move on the positive end as well. A lot of stocks that could be in focus are IT stocks, TCS, Tech Mahindra, Infosys. We are also looking at Bharti Airtel and Hindalco that could also be opening in the higher zone as well. But let's welcome our other guest also on the panel now. We have Kunal V. Parar now joining in on the program, Vice President Technical Research at Choice Equity Broking. Welcome to you, Kunal. Good to have you with us. Tell me, how are you looking at the last trading session of this week? We are on course for the second consecutive weekly move on the positive side that we could be seeing if we end positive today. How are you expecting? Will the markets hold on? Will the Nifty hold on above 25,000? That's a clear one.
Well, good morning. And Nifty has already trading about its 100 days moving average, and this was the main hurdle which Nifty was showing as a strong resistance. Right now, Nifty is trading above this level, so we may see some kind of good upside momentum in the market. Not only this, some positive sentiment has already been built up by U.S. government. So I think it is also adding some fuel for some bullish momentum. Right now, in pre-opening, it is trading at 25,074 level, sustaining about 25,000 level. So we may see some good upside momentum up to the level of 25,160, and if it breaks this level, then 25,300 would be there. Whereas if we talk about downside, then Nifty has a strong support of its 100 days moving average, which was acted as strong resistance. Now that has become a good support for the Nifty. So that support comes at 24,800. So but obviously, we may see some good upside momentum this last week of trading weekly.
Okay, got that. Kunal, two stock ideas that you could share with us before the markets open?
Well, definitely. One stock is Tata Chemical. The way stock has been trading on its daily chart during yesterday's trading session, it gave a breakout of its range bound momentum, trading above its 21 days moving average, which clearly indicates for some positive upside momentum in the counter. So we may say good upside momentum in the counter from the present level. One can get into the stock at present level. If we talk about target wise and SL wise, one can keep SL at 950 level, and if we talk about the target wise, first target comes at 982, 982, and if uh, stock break this level, then further upside would be there up to the level of 1005. So first pick is from my side, it's a Tata Chemical, and the second is Sriram Finance. If you talk about this stock has already given a good breakout of a range bound momentum. Even during yesterday's trading session, it spurred by 2.5% with positive volume activity. So it clearly indicates some good for upside momentum still left the counter. So one can get into the stock at present level. Right now, stock is trading at 623. If you talk about SL side, then one can keep SL at 603. And if you talk about the target wise, the way stock has been trading on its daily chart, I think first target would be at 638, which is its previous top. And if stock break this level, then further upside would be there up to the level of 663. So from my side, Sriram Finance and Tata Chem.
Okay, Shriram Finance and Tata Chemicals that one can definitely look at for the trading positions that one can take on these stocks. Some more stocks that you should be watching out for, apart from the ones that we have discussed, from the IT pack, from the auto pack, names that, Kunal has also taken. Let's also look at some of the other stocks that are in news flows today. Look at Bharat Forge, for instance. The company, along with Wind Racers, has announced a strategic MOU to advance UAV operations in India. And the company's arm, Kalyani Strategic Systems, has also signed a landmark, first of its kind contract with Great One subsidiary MP3 International to supply large caliber 155 howitzer barrels and other critical parts to the UAE as well. So that stock will be in clear focus. We'll also look at from the real estate space, Lodha Developers to be in focus. The company, along with Maharashtra government, has now signed an MOU for a 30,000 crore rupee investment to develop a green integrated data center park in Palava in Mumbai. That's a big one that could be coming in that we will be definitely looking at. JSW Energy, the company successfully commissioned a 317 megawatt of renewable energy capacity with hydro capacity of 240 megawatt solar capacity and 34 megawatt of wind capacity, of the 43 megawatt, taking the total installed capacity to now 13,097 megawatts. Keep an eye out on the renewable energy space as well because of that. NBCC from the PSU space is also in focus. There's an MOU signed with RICO for projects valued at 3,700 crores. From the FMCG space, I'm going to be looking at Marico. The company has entered into a definitive agreement to acquire remaining 46% of the paid-up share capital of HW Wellness Solution, the owner of True Elements, and that's what we're going to be looking at. Abhishek ji, coming to you, how are you looking at Lodha Developers, data centers, the large opportunity there next to Mumbai, 30,000 odd crore rupees?
Yeah, I think data centers is obviously a huge opportunity,
Yeah.
uh, and the way we are all consuming data, whether it is through OTT, whether it is through this kind of a streaming service, uh, it's just exploding, and with more and more regulation that the data needs to reside within India, right, within the country geography, the need for more and more data centers is going to go up. So most of the players who are you know s- working in the data center side,
Yes.
specializing there, is likely to do well. Uh, Now, having said that, we have to understand the various components of data centers, right? So most of the real estate players are basically just building the they're just creating the building. Uh, and then you have people who supply power, backup power. Then you have people who supply the hardware, the racks and things like that. So the biggest value add is in the racks and the computing environment. That is where India does not have too good a presence. But other than that, I think there are multiple players in this one.
All right, the markets have opened now, viewers. Let's look at that. 63 point of an uptick. We are at 25,067. Across the board, there is a positive move. Look at the Sensex, look at the Nifty, that's on a higher end. Even the Nifty bag 1/10% higher. The mid and the small caps are also higher. In fact, they are outperforming the benchmarks with about 4/10% of a move that we are seeing on the market. So all the major benchmark indices and the secondary indices, they are all higher in trade. Sectoral move also is on a largely positive side. The IT index is up by about 3/10% right in the opening, 7/10% in fact. Now right in the opening, you see real estate following next with about 6/10% move. Small caps, mid caps shining bright. You have metals that are up. Pharma that is also pulling up in trade. I think barring just FMCG and PSU banks, we're just seeing some profits being taken off after 3 days of a consecutive move. Rest of the sectors are all up. This is despite the fact that India VIX is down by 1.5%. Infosys is the top mover on the Nifty, 1.5% higher, top mover there, followed by Hindalco, that's up by almost 1%. Tata Consultancy Services, Maruti, Tata Motors. So auto and IT clearly ruling within the top movers on the Nifty right now. On the downside, what do you have? You have HUL that's down, ITC that's down, so FMCG is on the back foot. Eternal that's taking a back seat as well. You're also looking at Grasim, SBI Life and Ultratech Cement, some of the cement basket stocks that are also lagging in trade, at least for now. But clearly it's IT all the way that we are seeing at this point in time. Kunal, to you, how are you looking at IT sector? What will you do with Infosys after the big buyback that's been announced? What's your trading bet?
Well, if we talk about IT sector and that particularly Infosys trading at 1534 up by 1.5%. Further upside would be there in this counter and the way stock has been trading on its daily chart. The stock has already given a breakout. Now, minor resistance is there at 1540 level. And let's say if stock sustain above this level, then we may see a very good upside momentum in the counter up to the level of 1660. So I think this is the perfect time to get into the stock. And I think, you know, it's a rhythm or it's a custom. One can say that after coming up with buyback from IT companies from the IT sectors, many IT companies following the trend. So we may see some buyback announcement from the TCS, Wipro as well in the near future. So one has to focus on the IT sectors. And if we talk about the Infosys, this is the perfect time to get into the stock for target up to the level of 1660.
Okay, fair point. I hope this has also helped you out in understanding what should your strategy be there. Abhishek ji, since we were talking about the real estate play, the index is up by half odd percent beyond Lodha also. Do you like any other stocks that you could mark out for our viewers?
Yeah, I don't want to get into individual stock names, but
Okay.
I think overall the real estate sector looks very interesting, primarily because of the demand drivers we just discussed, right? I mean,
Yes.
more money in the hands of people, uh, lower interest rates. The only challenge I think in the real estate market is that even today, I think the low income housing or the middle income housing is not picking up. It is the biggest action is in the high income and the high valued premium real estate space. So that is where I think most of the companies are doing well. So, from a stock market investment perspective, I think, you can focus on companies or real estate businesses which focus more on the higher tier.
Okay, got that. Coming back to you, Kunal, let's spot some stock ideas then. Are you looking at anything from the broadest index? We are looking at so many top movers with smart gains. JBM Auto is higher in trade. You have Electrotherm that's up and about in trade. We have Nectar Life Sciences, many such stocks that are hovering higher. Look at even names like Gensol Engineering that's up and about, Atul Auto. Many of these stocks are higher. Some of them are auto ancillaries. What's catching your attention in the Nifty 500 basket?
Well, if you talk about Nifty 500 basket, no doubt we are witnessing some good spark in this Nifty 500 basket, and one to two stocks are there which looks very attractive. If you talk about Nifty 500, and not only this, one should focus right now on the few stocks like Paytm. Paytm is doing very good for our viewers, not only viewers but traders as well. Right now trading at 1232 it has been trading it has been trading above, say, 52-week high, and right now trading at 1232. One can get into the stock because stock has already given a breakout, trading upwards 100 and 200 days moving average. So we may see a further upside momentum from the present level. Right now stock is trading at 1230. One can keep SL at 1200 level. And if we talk about target wise, the way stock has been trading, I think first target would be at 1255, and if stock breaks this level, then 1290 would be a final target. Not only this Paytm, but I think Nifty 500 or Nifty 500. I think one should focus on Astral as well. Right now, Astral is trading at 1469. One can keep an eye on this Astral Limited. Stock is trying to sustain up its 200 days moving average. Not only this, stock has also given a breakout of its inverted head and shoulder formation on a smaller time frame. So we may see some good upside momentum based on this formation breakout. One can keep SL at 1430. Right now stock is trading at 1467. We will keep SL at 1430. And if we talk about target wise, first target would be at 1495, and if stock break this level, then very good upside momentum, very good rally set. We can see the counter up to the level of 1545. So both the stock looks very attractive on daily chart.
Okay, fair point. Coming back to you, Abhishek ji. Abhishek ji, what else is looking good to you? Are you looking at economy-focused sectors and stocks as well, sir? What about metals, oil and gas? Are you looking at that? There have been some momentum here too.
Yes, yes. So I think right now we are more looking at the cyclical sectors. We are looking at infrastructure. We are looking at engineering, uh, agrochemicals, chemicals, uh, consumption. That's the space that we are looking at.
What about bullion for that matter, which has been consistently soaring higher, sir, gold and silver vis-a-vis equities? I'm sure a lot of your clients must be asking you, since markets are in a very huge time correction of sorts, and gold and silver, there's an unstoppable rally. What exactly should be the right approach? So how are you advising clients on that?
Short to medium term, gold and silver look good. Long to very long term, these are sort of asset classes which move very quickly for some period of time, and then they consolidate for very long periods of time, right? So you have to be able to time it well. I don't buy this concept of store of value, etc. I mean, that is for the central banks. For normal households, you are much better off buying businesses, because one is obviously you get a cash flow in form of dividends, etc. And a reasonably good basket of stocks will give you better returns than what a gold and silver will do over very long periods of time. But in the short to medium term, definitely gold looks very interesting, uh, because of this chaos in the world. Most central banks are sort of accelerating their bullion buying.
Okay, and would you want to play this at all via the stock markets, maybe the jewelry stocks or gold financiers, sir?
If I have to take a bet on gold, I would rather buy the gold ETFs and things like that.
Okay, so instead of looking at via gems and jewelry or gold financing, go for direct gold and silver, even at this point in time, is what Abhishek ji definitely says. Kunal, what about you? How are you looking at the likes of Titan, for instance? Remember, coming up in is the festive season and the wedding season thereafter. Gold prices have already soared to lifetime highs. Silver was also high. I think that the only risk that most of the brokerage houses are also marking out with respect to Titan is that the demand, because of all-time high levels of gold and silver, could take a backseat. But at the other end, there is a consistent hope that the sales will be higher for the jewelry division even this time around. We do have a report from, this is Kotak Institutional Equities on Titan that has a reduced rating, a target price of 35.75. From the management meet takeaways, they've marked out that Titan is on track to deliver 15% plus sales growth and about 11.5% EBIT margin as well in the domestic jewelry segment. But definitely they've marked out a risk of all-time high levels of gold and silver.
Well, very well said. Actually, right now gold is trading at all-time high level, and it may become difficult for middle class to get that yellow gold in their pocket or in their house home flat. So I think it may see some kind of low number pressure during upcoming trading session, upcoming result session. But if you talk about overall perspective of technical chart, and if you talk about other counters, no doubt the Titan is doing that. Titan is trading at somewhere around 3578, and we may see some kind of selling pressure from the present level, and it may fall up to the level of 3500, and if selling pressure continue, then even it may fall up to the level of 3440. No doubt festive season is there, but this scenario may hamper the overall sentiment of jewelry market. So I think one should avoid this stock for time being. If stock approaches this 3500 or 35400, 3440, then only it would become a good buying opportunities. Not only this, if you talk about other counters like Rajesh Expo, then yeah, on a daily chart, the stock looks attractive compared to Titans right now trading about 200 days moving average. We have seen a very healthy correction in this counter up to the from the level of 320 to 160, and right now stock is trying to give a breakout of its double bottom formation. It has been trading about 200 days moving average. So compared to Titan, I think one can focus on Rajesh Export at present level. One can keep SL at 190 level. Right now stock is trading at 201 level. If you talk about target wise, first target comes at 214, and if stock break this level, then one way rally would be there up to the level of 250. So compared to Titan, I think Rajesh Expos looks very attractive, and amongst the other peers.
Okay. Coming back to you, Abhishek ji, apart from the secondary market, the primary market buzz is on, and we have three IPOs that will be closing for subscription today. There's Urban Company, there's Dev Accelerator, there's also Shringar Mangal Sutra. Are you looking at positively any of these IPOs as an opportunity for investors? Last day today, would you advise subscribe on any?
So by sort of a policy, I don't subscribe or I don't ask people to subscribe on IPOs. Having said that, Urban Company is a business which is very unique. It's taken up a challenge in India which was completely sort of fragmented, unorganized, and it has brought it into an organized market. Extremely good business. How it does on the market is something that we have to see. But from a business perspective, this is a business that definitely merits at least attention, if not investment. If not today, maybe some later point in time. But definitely a business worth tracking because they are doing something which is different, which is unique, and which is solving a real world problem.
Absolutely. So when we talk about these new age tech-based platforms that are solving a lot of urban, center problems and saving a lot of time for urban users as well, what else within the secondary market also that you're looking at within this basket has continued, opportunities that investors can track from the new age tech space? I'm asking, sir.
So I think both Zomato and Swiggy. I'm pretty positive on them in the sense that again a business which or these are businesses where people have become used to using their products. The change in behavior has been significant from the consumer standpoint. So even if you see both Zomato and Swiggy have been slowly increasing their fees. Initially I think it started with 2 rupees and it went to 5 rupees. Now I think it is about 10 rupees per delivery, and even with this kind of an increase, it's not making a dent in the number of orders or their overall take. So it's a very interesting. These are businesses where there is consumer demand. I think that is what is more important. And second is that it is not very easy to create uh, a replica of this very easily. You cannot create a Swiggy or a Zomato if you wanted to very easily at this point in time. So there is definitely some moat in their businesses, exactly like what Urban Company has been. I mean, obviously there will be more competitors which will come in once this company lists and people start seeing wealth creation happening. There will be other players who will be wanting to do it. There are already some players who are doing this, but to be able to reach the scale that they have reached, that's not something which is easily done.
Fantastic. Thank you so much, then Abhishek ji, for being with us on the show and helping us out with all your insights on the markets and various
Thank you.
opportunities that you've marked out for our viewers. Good to have you with us this morning and hope to see you soon on another
Thank you.
edition of Business Today as well. Kunal, we'll continue our conversation with you. First 15 minutes of a candle is formed. What are you marking out for us in terms of the trading strategy?
Well, if you talk about first 15 minute, Nifty is trading at 25,050 level, minorly up by 40 percentage, and the way Nifty has been trading on its daily chart, I think one should wait till 10 a.m. as well, because Nifty is trying to settle it down on first 15 minute. No doubt, good part is that Nifty is trading above uh, previous high of two last trading sessions, so it's a good part, and based on this, we may see a further upside momentum. But till 10 a.m., I think one should wait to get into the Nifty or a Bank Nifty.
Okay, Kunal, also help us understand what else are you marking out? I think auto space after 2 days of some profit booking is back into action today. It's in the driver's seat back. Auto space is, the index is up by 1%. You're seeing a lot of stocks that are buzzing right now. Look at Eicher Motors, it's moved to the top spot now, almost 2% higher, 6,884 for Eicher Motors. Look at Tata Motors, look at Hero, Maruti. At least from the top 5 names on the Nifty, you have 4 names that are from the auto pack again. What does this show? That the rally is still to be seen as far as the auto pack is concerned. Can one still continue to build on positions here?
Well, we have seen a very good upside momentum in Autopack, right? If you talk about Eicher Motor or M&M or Hero Motor of Maruti, we have seen a very good upside momentum. We have seen a very good return this counter. But if you talk about other counters, then risk reward is in favor for creating a long position, particularly in the Tata Motors. Tata Motors is trading at 1715 levels. Whereas if you talk about other counters, then my recommendation is for holding those positions, not creating any long position, because we have seen a very magnificent momentum in this counter. But the way Tata Motors has been trading, I think it has just started its rally. So this would be a perfect level to get into this stock. Right now, stock is trading at 1707 level, 717 level, trading above its 200 days moving average. And if you talk about SL side, downside, one can keep SL at 698. And if you talk about target wise, the way stock has been trading, I think first target would be at 730, and if stock breaks this level, then one way upside would be there up to the level of 800. So amongst the other counters, I think Tata Motors looks very aggressive, only for fresh recommendation, whereas other counters looks good, but not for fresh recommendation.
Okay, fair point. So that's the auto pack. Pharma space is also picking up some pace after some time now. Let me also look at some of the winners here. Lupin, long time erstwhile favorite of investors. That's up by 2.7%. You have Natco Pharma that's picking up pace. You have Laurus, Cipla, Alchem Laboratories, Mankind Pharma, Divi's. All of them are also coming back into action at this point in time. What's your approach on the pharma space right now, Kunal?
No doubt, we are witnessing very good upside momentum in pharma stocks in today's trading session. If you talk about Lupin, Cipla, or the Oro Pharma, Alchem, all these stocks are trading at a very good level. But if you talk about few stocks, then I think Lupin looks very attractive on a daily chart. Reason being, stock has already given a breakout of its range bound momentum. Stock was facing a strong resistance at 2011, right now trading above that level. Not only this, stock is trying to sustain above its 200 days moving average. Stock has been already trading above its 100 days moving average. So all this equation goes in favor for creating a long position at present level. Right now stock is trading at 2044. One can get into the stock with the strict stop loss of 2000. And if you talk about target wise, the way stock has been trading, I think first target would be at 2080, and if stock break this level, then further upside would be there up to the level of 2132. Whereas if we talk about other counters, I think one can also keep an eye on Laurus Lab. Right now Laurus Lab is trading at 903 level. We have seen a very good upside momentum in this Laurus Lab. Stock has been trading and it's uncharted territory, trading at the 52-week high level, and stock has already given a breakout of its pendant formation on daily chart. So all the equation goes in favor for creating a long position, particularly in this counter. Right now stock is trading at 906 level. If you talk about SL side, one can keep SL at 880. And if you talk about target wise, the way stock has been trading, I think first target comes at 926, and if stock breaks this level, then further upside would be there up to the level of 958. So I think one can keep on this two stocks which looks very attractive on a daily time frame.
Okay, got that. Let's look at the PSU space at large now, Kunal. What's happening here within the PSU basket? Where do you think the trends are shaping up within PSUs yet again after a long haul of being in a consolidative zone? Where do you think the outperformance can now come in? We have had so many pockets on in the past that have rallied and given a lot of wealth to investors. Defense has been one, railways has been one, power has been one. We've also seen a lot of other defense makers as well. But look at all of these sectors. They have all been in a lull zone for a long time now. But where do you think the pickup can happen? Where are the trends showing up on charts?
Well, if you talk about PSU counters, I think no, we have been witnessing very good upside momentum in CPSC counters as well, NLC India, NBCC, SGB, and ONGC. And if you talk about PSC counter, I think GAIL, RBNL, IFC all looks very attractive on daily chart, but I think one should focus on RBNL right now trading at 337 level. And the way stock has been trading on its daily chart, further upside would be that this counter stock is trying to give a breakout of its recent top, which is placed at 340 level. Right now stock is trading at 337 level. Not only this, stock is trying to give a breakout of its flag formation as well on a smaller time frame. And if you talk about other parameters, then stock has already taken a strong support of its 303 level. So equation goes in favor of creating a long position only. One can get into the stock at present level. If you talk about SL wise, one can keep SL at 324. And if you talk about target wise, the way stock has been trading on its daily chart, first target would be at 347, and if stock break this level, then further upside would be there up to the level of 363. So first counter is RBNL, and if you talk about other counters, then I think one should focus on GAIL. Right now trading at 183 level, trying to give a breakout of its recent top, which is placed at 181, trying to sustain over its 200 days moving average. So equation goes in favor for creating a long position only, but I am not suggesting to go for any trading perspective or maintaining any trading perspective in this counter, but this counter looks very attractive for medium term to long term. If you talk about target wise, first target comes at 206, and if stock break this level, then one way rally would be there up to the level of 230. So both this stock looks very attractive on a daily time frame.
Okay, fair point. Let's also take some of the other stocks, especially when we are also looking at the lagging side. FMCG has slipped today. Your PSU banks also seeing some profits being taken off. The Nifty bank has slipped into the red. Financial services are also down in the red as well. On FMCG, what's your call here? Kunal, if you could help us understand, do you think the strength continues to lag? This has been, I think, the biggest laggard space in the last 1 year, 1.5, 2 years kind of a time frame. Also, if we see in the performance that FMCG has done, there was some hope, and there still is, that the upcoming festive season could lead to some volume surge on the back of GST rationalization. But are you getting that confidence to invest in some of the large cap FMCG players like an ITC or a Nestle, Britannia, for instance, or maybe even mid caps, Marico, Imami for that instance?
Well, no doubt we have seen a very good upside momentum after this GST rate cut announcement, and all the stocks ran very well. But if we talk about at current level situation, then I think one should focus on Tata Consumer. Other stocks, if we talk about Marico, no doubt trading at 735, up by minor 0.13% upside momentum. ITC, United Spirit, Nestle, all these stocks are trading in a range bound momentum only as of now. But if I need to pick up, I need to pick any one stock amongst these other stocks from this FMCG counters. I think one should focus on Tata Consumer. Why I am suggesting this stock? Because multiple equations are there. First sign is that stock has been trading above its 100 days moving average. Recently, it is giving a breakout of its 100 days moving average also. Not only this, if you talk about momentum indicator wise indication, then it is trending above its 50 marks. So it clearly indicates some positive break in the counter, and right now stock is trading at 1107 level. So the way stock has been trading on its daily chart, we will see a very good upside momentum in the counter up to the level of 1150, and if stock break this level, then further upside would be there up to the level of 1180. So amongst the other FMCG counters, I think this is the only stock where I'm seeing a more bullish equations amongst the other counters. So one can get into the stock at present level. We will keep SL at 1075 for safer side.
Okay, got that. We'll note that down as well. Looking at some other stocks that are moving up in the Nifty 500 basket, you have Precision Camshafts, another 4.5%. I remember last week the stock has been consistently up. IOL Chemicals and Pharma up by 5% odd. That's also on the move right now. Let's also look at Gensol. That's up in trade. We have names like Nectar Life Sciences, that's higher. Electrotherm, Yatra Online is an interesting one that's been consistently on the move. Shakti Pumps is another one. Sigachi Industries has also been moving from last couple of sessions as well. Look at JBM Auto, we've marked out that for our viewers as well. Atul Auto is another one that's on the move, but I think large part of the Nifty 500 names on the move are from the auto ancillary basket right now. Clearly, because the auto theme is also on the buzz at this point as well. But what's on the lagging side on the FNO space? Look at Oracle Financial Services, profit taking, Dabur down, Godrej Consumer down in trade, Colgate Palmolive, large part of the FMCG stocks that are dragging in the FNO basket as well. But let's talk banks now. Kunal, how are you looking at the banks?
Well, if you talk about banking wise, the way all the stocks has been trading, the way this Nifty Bank and other private and PSU banks are trading on a daily chart. I think one should focus on Axis Bank and why I'm suggesting this bank because compared to other stock, I'm witnessing some good. Momentum. This counter stock has already given a breakout of its range bound momentum. Not only this, bottom formation is there with strong support of 140 levels among the other counters. And if you talk about moving average wise, stock has been trading above its 100 days moving average. And if you talk about the smaller time frame, stock has been trading about 200 MA as well on its early chart. So all this equation goes in favor for Axis Bank only. Whereas if we talk about other counters like Kotak Bank, HDFC Bank, ICICI Bank, and SBI, all these stocks has been trading in a range bound momentum only. So I'm not getting any sense to get into the stock at present level. Whereas if we talk about Axis Bank, it indicates clearly breakout on a daily chart. So one can get into the stock at present level. If we talk about SL wise, one can keep and SL at 1060 level. And if you talk about target wise, the way stock has been trading on is daily chart. First target comes at 1127, and if stock break this level, then further upside would be there up to the level of 1180. So among the private and PSUs, I think Axis Bank do some good wonder for our traders and viewers and investors.
Okay, fair point. So that's the banking names that we could definitely look at. Let me again look at the markets right now. I think it's autos clearly that's driving up a percent higher. Oil and gas is moving up. Now infra names are higher. Remember Abhishek ji also pointed out he's very clearly looking at infra, construction, metals, oil and gas as well. Pharma is up in trade. Small caps and mid caps are also hovering higher. Maybe we can discuss the mid and the small caps as well at this point in time. From the small cap basket, what's sticking higher in trade on the small cap 100 index? You have BEML that's up by 4.4%. You have HFCL that's up. Railtel is higher. Brainbees, that's the parent company of First Cry, that's also higher in trade. You have Hindustan Copper. You have MCX that's overing higher. Nuvama Wealth is also opening up in some gains as well at this point in time. So a lot of stocks that are in the buzz. Let's discuss the capital market story only. Kunal, we have a lot of AMCs, brokerage houses again back in focus. Even BSE Angel One that's in focus as well. MCX has been ticking higher. Are you focusing back your attention on these capital markets related stories as of now, or are you going to be waiting for some time?
Actually, I'm looking after this sector only because no doubt in today's trading session we have seen a very good upside momentum in the counter. We are witnessing a good spread discount. If you talk about BAC, Nuvama, MCX, Anurati, NM India, Angel One, CDSL Camps. But if you talk about fresh entry in any stocks, then I think MCX looks very attractive on its daily chart. No, recently stock has given a breakout. Of on a daily chart of its strong resistance which was placed at 6,970 level. Right now stock is trading at 7,682, trading upwards 21 MA on an early chart. And if you talk about support side, stock has already taken a strong support of its 7,385 level. So based on these equations, I think we may say for the upside momentum in the counter, one can get into the stock at present level. Right now, stock is trading at 7682 level, and we'll keep SL at 7385. And if you talk about target wise, first target comes at 7910, and if stock break this level, then further upside would be there up to the level of 8300. Not only this, I think one can keep an eye on NSDL as well, which is like a new entrant in this capital market. Stock is trading at 1303 level. Right now, stock has a strong support at 1280 level. And if you talk about target wise, first target would be at 1350. And if stock breaks this level, then 1380 would be there. But this is for trading perspective. But overall picture looks very attractive for NSDL and CDSL. But yes, compared to CDSL, NSDL looks very attractive for long term perspective. Even we may see level beyond the mark of 1500 on a daily chart.
Okay, fair point. All right, Kunal, then thank you so much for being with us in the morning edition today and helping us out with all your, clear stock ideas, the themes that you've discussed with all our viewers. Good to have you with us this morning. Hope you have a great weekend ahead. 45 points higher as far as the Nifty is concerned, viewers, 25,053. We've been remained in a narrow band of trade as far as the first half an hour of an action is concerned. But the good part is we've held on to 25,050 and to the opening gains as well, at least for now. Auto is back in the driver's seat. It's up by 1%. That's the top moving sector right now. We are also seeing core economy stocks from within oil and gas, metals, infra. That's also pushing up. We are seeing, however, FMCG today continue to lag, and some of the banking names like Nifty Bank, financial services, PSU banks also, which have been riding on, also see some on a back foot at this point in time. The IT stocks are also hovering higher. Remember, Infosys has announced the largest ever buyback in its history of 18,000 odd crore rupees. That's keeping the sentiments up as far as the IT space is concerned, even though it slipped from the day's high point, but still holding up about 1% higher in trade. Remember, this buyback is going to be at a premium of 1,800 rupees per share, which is much higher than the current market price as well. But this is through the tender route, as what we are given to understand. Let's see how this really shapes up the sentiment across the IT space, which has been on a rather weak side. We'll continue to get you all the fascinating insights from the market momentum, viewers. So stay tuned with us throughout the course of this session. And of course, I'll be back at 12 noon to answer all your stock related queries on daily call. So stay tuned for that.
On the sidelines of the 65th Siam Convention, Business Today is ruling its coverage on, of course, GST reforms and asking tough questions to the auto companies. And of course, auto companies have been very